Yeah, I thought you were going to do that this weekend.
Oh, hello, everybody. Good morning. It's Monday.
Good morning, Monday.
That's right. Speaking, you said you got to get a haircut.
Yeah. It's too long.
I was supposed to trim this or take it off, and it's just, let's see. I just looks like I'm getting older and older the more I look at my beard.
I just am older and older.
Yeah, well.
Hey, Equifax.
Oh, you're talking about this? Let's add this in.
Yeah.
So there's been a lot of things coming across over the weekend. One of the biggest things that I saw was, let's see if I get the right one. Equifax is getting sued because between March 6th and April 6th, if you ran your credit and they were part of it, on average, people were 25 points different. Because of a glitch in their system. One lady who's part of the class action lawsuit, which is on another page, she was down 130 points when she went to get her car loan.
Whoa.
And remember, car loans,
yep.
I mean, when they run the FICO scores for cars and versus mortgages, they're all different.
Completely different.
And I want to remind everybody, do not boost your credit to get a better score for mortgages, because we don't use Boost. Our mortgage calculation. So it's a waste. Plus, I think long term, if everybody does it, then all of a sudden, guess what? You're going to have all the utilities on your credit report so that they can tell you, oh, you better pay on time.
Mm-hmm.
All right. Then the other major thing I see as a problem, we talked about last week how Open Door, right? That's getting that guy
$62 million settlement.
Yeah.
For fraudulent advertising or false advertising.
Yeah. Well, they were talking about how that they're doing all the new stuff, but with the old deception.
I ain't gonna change my ways.
We're going so much better in this, but we're gonna deceive you like we always.
So of course Zillow wants to jump on that, huh?
Well, Zillow had the problem with they were flipping the houses, right? And then messed that up.
So
I've been saying this,
adjust the market.
This is for you and your agents. I don't know why people are still part of that premier Zillow program and getting the leads and paying for those and then building these companies to do this. I've been saying that for the last 5 years.
Why I said it since Zillow started. You're buying your own leads back.
Well, not only that, you're funding a company to grow and take you out of the business.
Right.
Because this is like one of those discount brokerages. This is what this is. And the problem with it is you want to be on the open market. If you're not on the open market, you're not going to get top dollar for your house, period.
Right. And you want to create your own leads. You're already doing it. When you put a piece of property on the market, you're creating leads. Right. Don't buy those buyer leads back from a third party. Don't do it. Just do your work.
The problem is look at those mortgage things over here.
What happened?
Grow your business with your mortgage. No, it was just lead pops, which is a great thing. So Zillow and Open Door, they're together now. They're doing this partnership. And I just would say, watch out. Open Door just got hit because they did the $62 million, what we just talked about, deceptive advertising. If you do it once, you're going to do it twice. And I'm not, next thing, lawsuit. Zillow, I'm just saying, stay away, use the normal. The problem is they're going, okay, we list over here with us on Zillow, and then they can get an offer from Open Door right away.
Mm-hmm.
And then get certain, and then that's taking one of the problems you guys should have is NARS backing them.
And, we talked about this the other day about ease of transaction. I firmly believe that just because the transaction seems easy because it was quick, you're spending too much money. You're leaving too much money on the table.
Yeah. The easier something is, sometimes you're paying for it.
I think you're paying for it big time.
Yeah.
So we won't talk commissions and stuff like that, but your bottom dollar isn't better because it was never exposed to the market.
Yeah, it's the worst thing. You want to be exposed to the market so that you can actually get the top dollar.
I believe that.
Yeah. So one of the other things that just happened over the weekend was the Senate passed that Build More Inflation Act.
Yeah.
What I don't understand. So it's called the Inflation Reduction Act of 2022.
Mm-hmm.
All right. So this is what it's going to give you. It gives us higher taxes, more spending, higher prices, and an army of IRS agents.
Isn't that inflation?
Yeah. Well, this is what I'm going to tell everybody. So back in the late 80s, early 90s, there was a lot of IRS agents. And what they would do, and this is happening now. So 50% of the people who were audited last year made $75,000 or less.
Mm-hmm.
So they have learned, IRS agents have learned that if they go after people in the lower income area, they don't have accountants, They don't have people to protect them and have them fight them. So they can get an extra 10 grand real easy from them. Right. If they take on a business that's a corporation or whatever, 1%, I think on average, 1% of all corporations are audited. That's a huge that's a small number in a huge pond. You have less. So what I'm going to tell you, if you're a C on where you file it as sole proprietor on your tax return, you better get incorporated. You better get LLCs, something. Talk to your tax guy, because they're going to be coming after you, because you're easy for them to come after.
Easy target. Yep.
And they're going to think, hey, he's not going to have an accountant helping him. He's not going to have an attorney there with this stuff. You don't want to be careful.
I made that mistake for years, and I finally incorporated. And I think a lot of realtors make that mistake. They don't think about it. They don't get good advice from their tax guy, if they have a tax guy. Right. So
stop doing it yourself now.
Yeah,
it's not worth it. Yeah,
get someone who's
going to be there for you
and be there for you.
Yeah, because if they think that they say, oh, it's signed by so and so, that means they have someone. They looked at the numbers. They're less likely they're going to come after them. But this is how they're going to pay for most of this, is by, they say, getting doubling
taxes.
the amount of IRS agents because of this act.
Yeah,
that's not the way you pay for things. And that, and the other thing is, so they increased, so they got less costs for some medication, but hearing and other stuff, if you're elderly, is still not part of your Medicare. You can't get hearing aids. You can't get the stuff that you need, but it's just
that actually, that could be a good thing. You just can't hear what's going on.
Is that what it is?
So you're in peace. You're like serenity now.
All right. So that's all I wanted to bitch about, is just be careful. All the agents who watch us or listen to us, and if you're a small business owner, make sure you incorporate so they don't come after you. And
absolutely.
Be very careful now, because they're going to look for that.
Be smart. Yeah. Be smart. So I was reading some articles this weekend. You and I have been talking about, we're seeing these headlines about increased inventory and turning into a buyer's market. And we were wondering, where the heck is this happening? Well, it's not happening here in California. I'm going to tell you, it's happening in New Orleans, Arkansas. So those are where the articles are written, where this one, I can't remember the guy's name.
That's okay.
It doesn't matter. He says, we've turned into a buyer's market. Really?
Yeah.
Yeah.
What's their average price?
Oh, probably 135, 250, right in there. But what I'm thinking is, they also look at the numbers, and it's that the stats,
right.
You have 5 listings and now you have 10. So did you increase by 50% or 100%?
Well, you also got to look at, it's the worst time to buy there.
Well,
it's hot, it's humid.
Yeah.
Some places just had a flood. Some other places had this other issue. So, more and more people are going, wow, I'm paying, my interest rates are up and I'm not getting that great of a deal.
Great time to buy investments.
Yes. Now, the other thing I want to go ahead. Did you want to throw something in there? All right. Sip your coffee. All right. The other thing I wanted to talk about, I was remembering as we were talking, and it's probably
now it's gone.
Yeah, that's that old timers brain.
I suffer from that.
Yeah. Now it'll come back to me. Something. Oh, remember on Friday we had that unemployment thing came out, and it was double numbers. Well, when they started dissecting the numbers,
they found out they were wrong.
Well, they found out 303,000 of that
500,000
was new part-timers.
Oh,
so what it is somebody who has a full-time job went out and took a part-time job to survive.
Right.
So if you take that out, we're actually lost numbers. So we haven't recovered from that.
Where they expected to be. Or
right,
lower.
Right. Exactly. Right? So and then I got sent something today from one of my financial advisors I know real well. And it's basically saying that they're thinking that we peaked with inflation in July and we're starting to come back the other way.
Oh, okay. So we'll no longer have inflationary days in our recession.
Yeah. We're not in recession.
Oh, because they got a new definition for it. Right.
We're losing everybody. What are you going to do?
What are you going to do?
Yeah, well, this is it's about mortgages. It's about what's going on in the market in the Monday morning.
Well, what drives those mortgage rates and what drives the market? I've seen a small increase in active properties on the market, but I'm talking a very small increase, and buyers are still able to compete against one or two other buyers and get stuff approved.
Right. So it's not. So California has always been a unique market, no matter when. It should be its own country when it comes to stuff. We have a GDP. We could be a country.
California.
Yeah, California.
Yeah, we used to be.
Yeah. Well, now we're just a non-golden country. We're more of a tarnished country.
Right.
Yeah, to get into a third world. We're starting to get some of the 1929 to 1930s housing. What were they called? Hoosiervilles or whatever back then during the Depression. We're seeing a lot of those with all the homeless camps. So I want to thank our government for getting us back here.
Hey, we had the city planner for Riverbank speak at a marketing meeting in Oakdale on Thursday.
Was it about those houses?
The tiny houses.
Yeah.
And they've got a whole subdivision that is being approved and will start. And
so they did approve it. They did approve it because they had to make a change in their charter or something because it didn't allow that.
They did, and I
size.
think I'm not going to say for certain that it's completely approved at this time, but the map is there. You can see where it's going to be. It's going to be an interesting little thing. No pun intended.
Right. Well, I was watching the show called Bargain Flips or whatever, and it was back in Detroit, and they did a 649 square foot house that they'd fix, and of course they're selling it for 110,000.
Right.
Different, all brand new, and then other ones, just how cheap places in Detroit are for. Because I don't know if nobody wants to live there, but I mean, they're renovating these huge these whole houses, and they're selling them for, and I'm talking recently, not like 2 years ago or 3 years ago, for 130,000, 140,000.
Well, these are going to be like 400 to 1,100 square feet. They said they had to go like 400 to 1,100 square feet.
Oh, so in the paper they said 6 something to 7 something.
Well, I'm just telling you what she said that day.
So they must have made a change to them.
They may have made a change, and to me, 1,100 isn't a tiny house,
no.
But a definition of a tiny house. But the number that they threw out that they were thinking they were going to be asking was just, I'm like, huh? And she said, don't quote me on this, so I'm not going to quote her, but it was astronomically high. I thought they'll never get off the ground.
Well, when they put them in the paper and they talked about it a couple weeks ago, they said 600 to 700. I'm just saying what they said in the paper, and they were going to start off at 350.
That's the number.
350,000.
And I'm like, well, I don't know.
That's a couple $100. They'll go. I'm just telling you, they'll go because they're new. You can shake your head all you want. You're not going to get those marbles out, and we're going to still have this problem.
I like the sound of the marbles in my head. They keep me company.
Someone's got it.
That just seems, the shaking of the head is not saying no. The shaking of the head is just disbelief that they would sell for that.
I know exactly what you're talking about.
Yeah, exactly.
So I mean, there's a lot of stuff happening, but back again, California market is not the same as everywhere else. So if they start talking about 3 month supply and other stuff nationwide, we're nowhere close to that. When they talk nationwide appreciation of 20 or whatever percent, that means California is at 28 or 27.
Exactly.
We're higher than that, and they can't count what they're talking about nationwide. So if there's a slowdown nationwide, it's in some of those smaller countries. Smaller states that technically you can't get off the porch during the summer.
Right You don't really want to live there, but you are living there.
Because I mean, Texas and Florida still doing decent, Texas and like some places are having reduction. That's just because where they're located.
Talking to my buddy the other day in the East Bay, we were talking about something else, and it came up that he says, how's the market over there? And I said, we're doing well. It's active. We're not seeing, 30 offers. And he says, we're still doing fairly well over here too, but we're seeing like 5 offers,
and that's good,
not 7 or 30. Yeah, it's more of a normalized market.
Well, that way we're not ridiculously going up 50 grand because someone added it to the price just to get the house.
Yeah,
we're going to go up normal appreciation, probably between 7 and 10, which is sustainable. We're able to get people in homes. They're not bid out of homes in 3 years where they can't afford the area anymore.
Yeah. Moral of the story is, if you're a buyer right now, buy.
Yes, we've been saying that. Yeah, don't worry about interest rates. You'll be refinanced. I keep hearing that on TV with all these companies talking, get in, lock now and shop, and then we can refinance you later. Same. Everybody can do that. Yeah. Everybody can lock you while you're shopping. But not necessarily do you want to do that.
Yeah. Does that mean everybody's listening to us, or are we just a sounding board for what's really going on?
I think we just
synchronicity.
Yep. I think we just think that this way, and everybody is starting to see what we're talking about. Or we'll just say that. Talked to
an agent the other day who thought it was the worst time in the world to be able to be in the real estate market, and was thinking about getting out.
Really? Yeah. Had they been through 2006
or 7? No, they had not.
Okay.
They'd never seen 2006
or 8. I remember people getting in back then, and I'm like going, what? why are you getting? And then they some of the best times they could have been in and learned, and then now look at them.
Yeah, actually, as a realtor, if you get in during a market that's more normal or down,
or horrible,
it's horrible.
No,
it's
a
hard,
horrible market.
Yeah, exactly. It's hard to make a living right off the bat. But man, you do learn how to work, and you do learn how to provide customer service.
Right. And the agent who probably wants to get out, they're probably not working 40 hours a week in the business. They're probably not marketing. They're probably not talking to people. They're probably not doing videos. They're probably not doing other things that
they're no longer sitting in an open house, or actually they didn't have open houses back then, but they're no longer answering the phone and then writing offers or listing property and getting, you have one listing, but you get 30 offers. So you think you're working.
Yeah. Well, I had to turn my phone off yesterday because Sundays I don't work.
Yeah. Good.
I can need one day not to work, and people are like, I'm sorry for calling you. That's okay.
Yeah, it's okay. I didn't answer.
You get me other 6 days a week. That's enough.
Yeah. I never turn my phone off, and I do answer texts and phone calls and stuff like
you're
that.
So much better than me.
No. It's just,
you're an agent.
it's just, it's different.
Yeah.
I don't expect a loan officer to be available 7 days a week.
Yeah. Well, you can't. I mean, it's a little different because we work 40 hours Monday through Friday minimum, if not more than that. Then people want to get a hold of us on Saturday. I need to write this offer. Give me this prequel. I talked to you on Friday. We went over all. You just use that one. You know what I mean? It's like, what do you just? It doesn't have to say the actual address on there. It's okay.
No,
and especially if it's 9 o'clock at night.
Right.
Yeah.
No, you don't need the address in a pre-qual or a pre-approval letter.
Yeah. Not if it. Don't even say that Q word. That's not even a thing. There's only one thing that it should be.
It is still a thing.
It should not be. It should be fully underwritten pre-approvals only.
I firmly believe that we get
market.
These pre-qual letters all the time.
Well, stop going to banks.
I'm not going to a bank. I'm the listing agent. It comes with the offer.
I'm just saying, tell them to stop going to the people who do the quals. It's not worth the paper it's written on half the time.
Exactly.
And that's in my book, actually. My book.
I'm gonna have to buy a copy of your book.
I'll give.
I want it signed.
Yeah, I'll give you free. I'll sign it for you.
I want you to notate in it.
Yeah. All right. So thanks everybody.
Yep.
Or I should
thanks for listening.
I should say thank you for listening, and thank you for watching. We really appreciate it. If you have any questions or whatever, reach out to us. You can make a comment even afterwards, and we'll read it. We'll be back here on Wednesday. Mike, anything you want to say before we go?
I think it's going to be a beautiful week. It's going to be busy. Get out there and have fun.
And it's nice temperatures today.
Yeah.
I rode my bike. It was like cold this morning.
Yeah, no, I got your text. Ride bike. I'm here.
That's why, because I don't want you coming in the back and going, are you here?
Are you?
When are you getting here? All right, everybody, make it a great day. And thanks for watching.
Talk to you guys soon.
See you Wednesday.